The following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Okay, good afternoon, everyone. Welcome to another edition of Breakout Investing with Ken Shreve. My show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern. You can also find me on Channel 1 on Tiger TV at TFNN.com. You can also pick the show up on iTunes or listen live anywhere you want on your smartphone at tfnn.mobi. The number to use to talk to me about the market, about individual stocks, about whatever's on your mind, just call 877-927-6648, 877-927-6648. My Ultimate Growth Stocks newsletter just launched recently at TFNN.com. Don't forget to check out a trial to Ultimate Growth Stocks. You can try it free for 2 weeks and start to understand how I go about picking stocks in the market. It is a growth stock newsletter. Right on the homepage of TFNN.com, you can click on the newsletters tab and then investment newsletters, and you'll find Ultimate Growth Stocks right there. My letter is updated every week on Tuesday with email buy alerts, email sell alerts, and market updates in between. I initiated a new position in the model portfolio earlier today, so I sent an alert out regarding that, and so we'll see. We'll see how that goes. Taking a look at the market today, another good day taking shape for the market. Looks like volume on the NASDAQ and NYSE is going to come in pretty close to the levels that we saw on Wednesday. Volume yesterday on the New York Stock Exchange totaled 960 million shares, just under 1 billion. That's about close to its average. So NYSE volume could come in even a little bit lighter than that today. NASDAQ volume yesterday totaled 1.8 billion shares, also about average. NASDAQ volume today is tracking pretty close to Wednesday's levels. So let's see here. Quick check on the markets. We have the Dow up 30.5 points, about 0.3% to 12,425. The NASDAQ outperforming nicely, up 24 points, 0.9% to 2785, and the S&P 500 up 6.5 points or so, 0.5% to 1326. I have a chart of the Dow up for those of you watching in the Tiger's Den. You can see the Dow recently fell below its 50-day moving average. It's pretty much sitting right at that line today. I think the situation is pretty much the same with the NASDAQ Composite. We'll take a look at the NASDAQ Composite. You can see it's just bumping up against its 50-day moving average, and the same with the S&P 500 as well. Recently fell below its 50-day moving average, and indexes are higher today, but it'll be interesting to see if this 50-day line does turn into a resistance for the major stock indices at this point. So where are we at in terms of this rally? You've been listening to me in recent weeks, especially over the past week or so. I mean, the market is on a downtrend here, and that is important to pay attention to. My Ultimate Growth Stocks model portfolio is sitting in a lot of cash right now. I think I own maybe 9 or 10 stocks in the model portfolio, and I haven't really been aggressive at all in terms of new initiations, nibbling here and there, seeing what works. But stocks are generally having a difficult time making headway in this market. Now, over the past 2 days, you have seen some nice movers, especially in the growth stock universe. We'll go over some of those in just a moment. But the bottom line is that we are only 2 days into a rally attempt for the NASDAQ, for the S&P 500, and the Dow. That means it's still too early to be making big bets. It's if you've been favoring cash, I don't think it's a time to be moving back in simply because of the gains that we've seen over the past 2 sessions. Market action is encouraging, but again, the 50-day moving averages for all 3 major indices could turn out to be resistant. So at this point, I'm really going to be looking for just a sign of strength in at least one index, and I'm going to be keeping subscribers aware, especially if I do see that sign of strength in coming days. Then we could see some sort of tradable rally. But again, at this point, the indices are only about 4% off their recent highs. If I had my druthers, I would like to see a little more selling in this market. I'd like to see more sellers get shaken out. I think the market could use that. I think the handwriting is on the wall for that to happen. So I think the chances for more downside, not tremendous downside, but again, I think the NASDAQ could pay a visit to its 200-day moving average. I'll go back to the NASDAQ chart here. 200-day line for the NASDAQ is around 2,600. So that would be a pullback of another 5% or so, 5-6% from current levels. I think that's reasonable to expect with the amount of selling that we've seen in the market since early May. Now, if this rally continues, hey, we'll be ready to adapt and listen to what the market is telling us to do. So while I think the chances for more downside exist in the near term, I will be ready to act and put money to work for subscribers if market conditions tell me to do so. But at this point, 2 up days in a row doesn't mean we have a new market uptrend on our hands. Taking a look at some of the metals today. Gold for August delivery down moderately, 0.3% to 1522.80 an ounce. Let's take a look at the GLD. This is the ETF that tracks the price of gold. Technical picture of the GLD still looks pretty decent. You can see it's holding above its 50-day moving average. GLD is on pace now for 2 losses in a row, but fairly modest selling pressure in light volume. The GLD right now is down 0.3% to 148.12. Silver been on a recent winning streak. Silver futures lost 31 cents today, 0.8% to 37.33 an ounce. Pull up a chart of silver, see what we're looking like there. The technical picture of silver certainly looks a lot worse than gold at this point. Silver broke below its 50-day moving average. You can see headed into today, the SLV was working on a 3-session winning streak, up nicely. Today, SLV is down 1.9% to 36.21, still below its 50-day moving average at 38.17. Again, a situation where the 50-day line could turn into resistance for silver. Oil down just over 1% today to $100.23 a barrel. We'll take a look at what the dollar did. The dollar was weak again. We'll pull up the UUP, which basically, if you're bullish on the dollar, the UUP will be going up. The UUP actually recently rallied above the 50-day moving average. It, on an intraday basis, touched its 50-day line today. The UUP is down 0.4% today to 21.62. Its 50-day moving average is 21.52, so it's just sitting just above that level of support at this point. Also wanted to take a look at the Shanghai Composite. I haven't really looked at that index too much, but there's been a lot of selling pressure in the China market. The Shanghai Composite, you can see, down looks like 5 days in a row at this point. Recently was down 0.9% to 27.37. Really in a technically a poor situation right now. Below its 50-day moving average, below its 200-day moving average, and there are concerns that China's economy is going to be slowing down. I don't think there's any question that you're going to see a slowdown in China's economy, probably sooner rather than later. I mean, an economy is not going to continue to grow at 9-10%. I think you could see a slowdown in the 6, 7, 8% range. What that's going to do to the world economy, I suspect not a whole lot, but this is really a perception thing. If there's the perception is that growth in China is slowing, that could spur negative sentiment. So the Shanghai Composite in a lot of technical hurt right now, down several days in a row. So we'll keep an eye on that. A lot of China-related stocks have been not doing so well. We've talked about the recent selling in Baidu, the China search engine. We also have actually a stock that I wanted to take a look at in China that continues to do pretty well, and that's a coal company called Yanzhou Coal Mining. And we'll pull up Yanzhou right here, and You can see a stock, there's been a lot of selling among a lot of U.S. Coal producers, names like Peabody Energy, BTU, Consol Energy, Alpha Natural Resources, ANR. So a lot of coal stocks under pressure, but it is interesting to watch Yanzhou coal mining trade here. They're based in China. They're a big coal producer there. I think demand's going to remain pretty strong for this company's services over there, and its daily chart is, I think, reflective of that. Yanzhou today under a little bit of pressure, down 1% to 38.54, but as you can see, it is holding nicely above its 50-day moving average, showing good relative price strength compared to a lot of other coal producers out there. Economic data, we had a couple pieces of economic data that spooked the market early, but again, a resilient performance today so far by the Dow, S&P 500, and NASDAQ in light of some not so great economic data. Weekly jobless claims rose unexpectedly again to 424,000 last week from 414,000 the prior week. Economists were expecting a drop to 400,000. Not good news there. Meanwhile, the second estimate to first quarter gross domestic product came in at 1.8%. That was a bit below the estimate for growth of 2%. Wasn't a terrible number, but the fact that it was just slightly below expectations gave reason for the market to be under pressure early in Thursday's session. But again, a pretty solid performance as we head into the close during the last hour of trading. Indexes are up near their highs. So not a great reading in the second estimate to first quarter gross domestic product. Again, came in at 1.8%, just a bit below expectations. Inside the data, real consumer spending rose 2.2%, and that's down from an initial estimate of 2.7%. And I think the one reason you've been seeing weakness in the broad market since early May, the last 2 days of gains notwithstanding, is the perception that the economy could be slowing. We've seen some manufacturing data. Yesterday it was a weaker than expected durable goods report. Last week we had a weak reading in the Philly Fed Regional Manufacturing Survey. Before that, a weak reading in the Empire State Manufacturing Index. So there's a perception that the economy is slowing, and if the consumer really tightens the purse strings, what is that going to do to GDP growth going forward? So I think the overall the recent weak action in the market could be in anticipation of slightly slower than expected growth going forward. I'm not expecting a bear market to take shape here where we see a pullback of 15 to 20% for the major averages off their recent highs. But again, I think at this point, if we could just see a little more selling in the market, a little more sellers get shaken out, the NASDAQ maybe comes down to its 200-day line at 2,600. That is what I would consider a reasonable pullback before we start to see buyers come back into this market. Inside the Dow, we had shares of Microsoft. They were up nearly 3% to 24.83. We'll take a look at Microsoft. Interesting news here. David Einhorn from Greenlight Capital is calling for the resignation of CEO Steve Ballmer. Actually, investors like that news. The stock is up 2.4% today to 24.77. Big gainer in the Dow. So we'll take a look at a couple of other Dow stocks when we come back, and other gainers. We'll be right back, folks.
Tiger University's Tiger Trading Tracks is your blueprint to building a solid foundation of comprehensive trading tools. An in-depth educational program, Tiger Trading Tracks features a step-by-step process for understanding the markets and creating success strategies for your trading. The Tiger Trading Track journey will prepare you to adapt and develop a personal trading and investing strategy that will perform best for you. While you can't control the markets you trade, a Tiger Trading Tracks education will allow you to understand your personal trading and investing needs and what markets are best suited for you. Now is the time for you to travel your path to financial independence. Follow your Tiger Trading Track to trading and investment success. Go to tigeruniversity.com and click on Tiger Trading Track in the navigation bar. Choose the course that most interests you and begin your education today.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of tfnn.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks, to Breakout Investing with Ken Shreve. Thanks very much for listening. Let's take a quick check on the markets here. The Dow, let's see, Dow is up 0.2%. NASDAQ still outperforming, up 0.9% to 2785. Let's see, the Dow at 12,420. The S&P 500 up just over 6 points, 0.5% to 1326. So another good day taking shape with the market. I want to go to Joe right now in Boston. Looks like he's got an interesting chart to take a look at. What's going on, Joe?
Hey, Ken, how are you?
Pretty good, pretty good.
Good. Just a quick question here. If you're looking at this Qualcomm?
Qualcomm, right.
Yeah. Would you, based on your the way you do things, would you buy this above 58.46 and then add above 59.84? Or would you wait for it to clear that 59.84?
Well, okay, so what Joe is looking at, we're looking at a daily chart of Qualcomm. Qualcomm is in a very bullish technical setup right here, and the price point that Joe is talking about is the intraday high set on April 27th, 58.46. And for those of you watching in the Tigers Den, that's going to be the intraday high right in this area here. So, you know, if this I mean, it is setting up for a potential breakout, and you'd want to see volume come into the stock when it clears 58.46. That is the buy point. Now, its prior high before that, like Joe mentioned, is 59.84. But if you get a move over 58.46, that's the buy point. What could happen? I mean, if volume is strong enough, Joe, at the breakout, it shouldn't have any problem taking out that 59.84 level. If it doesn't, what you could see is the stock pull back again in light volume, and then you could get another entry point. But at this point, unequivocally, I'd look at the buy point at 58.46. It's a very positive technical structure here. The question is the market going to let it run? Right.
So do you like those tight patterns too, where you see the sideways?
Oh, yeah, without question. I mean, this is a very symmetrical base. Qualcomm started consolidating gains right late February, early March, and really since since late April, it's just been forming that handle area where the stock has been biding its time in light volume, really doing everything right technically. If we can get some follow through in the Nasdaq or the broad market, I mean, this is a stock that could do some heavy lifting. Now, whether or not it happens, what I would tell people with Qualcomm is don't buy in anticipation of a breakout. You can get hurt that way. Just wait for the volume to come in here and wait and see if it can clear 58.46.
Okay. Can I ask you about one more?
Sure.
IDT.
IDT. Let's just take a look at IDT. Okay, this is IDT Corporation, provider of prepaid rechargeable calling cards, network access, local exchange. Okay, so this is obviously a much thinner stock than Qualcomm. Average daily volume of around 200,000 shares. Kind of a small cap, 500, 600 million market cap. Technically, it looks reasonably strong. Personally, I tend to target kind of more liquid stocks than this, but. Fundamentally, it looks so-so. Technically, it could work, but looking at it quickly, not a huge fan. Fundamentals look a little suspicious.
Now, is Qualcomm the type for you? Is that too big of a market cap for you at like $95 billion?
No, I mean Qualcomm is obviously a large cap company, but when you get good technical structures in large cap names that have pretty decent balance sheets. I mean, remember that Qualcomm, you look at revenue growth in recent quarters, the rate of growth has been picking up. So you have some accelerating sequential revenue growth at Qualcomm, good technical pattern. The company seems well positioned for growth. So while I tend to favor small and mid cap stocks, I would certainly look at a name like Qualcomm because of its fundamental and technical strength.
Okay.
All right, Joe. Hey, always appreciate the call. Have a good one.
Thanks. Bye.
All right, Joe asking about Qualcomm, and for those of you looking, to understand more about ultimate growth stocks and the types of stocks that I target, Qualcomm would certainly be, one with a good fundamental, good technical picture, and definitely a breakout candidate. When I look for stocks to buy in my ultimate growth stocks model portfolio, I look for the fundamentally strong stocks, the technically strong stocks. A lot of them tend to have market caps of, $1 billion, $2 billion, $3 billion, but that doesn't mean I won't look at large caps either. And Qualcomm is actually a thing of beauty right now. Its chart looks solid, showing tight weekly closes over the past 5 or 6 weeks. So again, don't forget, check out a free trial to Ultimate Growth Stocks right on the homepage of TFNN.com on the newsletters tab. And we'll be right back, folks.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at TFNN.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this this new charting software package that we're offering a 30-day, no questions asked, money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a
Okay, welcome back, folks, to Breakout Investing with Ken Shreve. Appreciate you listening. So we just heard from Joe in Boston, had a question about Qualcomm, and again, Qualcomm is looking pretty healthy from a technical perspective. Could see a breakout in Qualcomm shortly. Also wanted to take a look at a stock that's been trading well in the market, Precision Cast Parts. That's ticker PCP on the New York Stock Exchange. Shares were recently up close to 2% today to $156 a share. Earlier this month, the company reported strong earnings helped by strong demand for the company's cast and forged metal products, which are used in aerospace and other industries. I have a chart up of PCP right now, and you can see a good solid breakout just 4 or 5 weeks ago, and this is a stock that's showing continued strong technical action after the breakout. This is a tough environment where breakouts can really run meaningfully, but they can show healthy action as well, and Precision Cast Parts is doing that. So you can see it made a move, broke out to new highs, and then started moving sideways, and this line here is the 10-week moving average. So it basically just kind of moved sideways, firmed up at its 10-week moving average, and that could presage or precede additional price strength if this market is ready to move higher again. So this is another example of a type of chart I would be looking at for my Ultimate Growth Stocks model portfolio. I have a whole bunch of stocks I'm watching right now, and again, I did nibble at shares earlier today of a stock that was breaking out powerfully, and I'll see if it works, because some will work and some won't, and we'll just we'll see how it goes. So Precision Castparts, another stock out there with strong technicals. A couple of IPOs hit the market today. We can talk about those. Freescale Semiconductor, ticker FSL, on the New York Stock Exchange raised $783 million by offering 43.5 million shares at $18, well below the expected range of 22 to 24. Freescale does carry a lot of debt, and I think Wall Street is a little bit concerned about that, which may have been the reason behind the lowering or the lowered pricing. So it priced at 18. Shares were recently trading around 18.75, up about 4% on the day. Also, Spirit Airlines, ticker SAVE, SAVE. It's a low-cost, low-fare airline with service to Florida, the Caribbean, and Latin America. Spirit Airlines raised $187 million by offering 15.6 million shares at $12 a share. That was at the low end of the revised $12 to $13 price range. The company had originally planned to sell 20 million shares at a range of 14 to 16. Shares of Spirit Airlines were recently trading around $11.50, down just over 4%. So IPO market remains vibrant. A couple of decent offerings today. Freescale, not too bad. Spirit Airlines, not so great. But again, these two IPOs come on the heels of Yandex, the Russia search engine. That had a successful first day of trading, and also LinkedIn last week, ticker LNKD on the NASDAQ, continues to trade pretty well as well. All right, also wanted to take a look at Chipotle Mexican Grill today. That's ticker CMG on the NASDAQ. And let's take a look at Chipotle. This is an interesting company. I mean, you can see Chipotle has made a huge price run over the past couple of years. So anytime a stock makes a move like this, I'm always skeptical. You have to ask the question, has the big money already been made? But it's hard to knock Chipotle's price strength in this current market. You can see it's trying to break out again to fresh all-time highs. Shares were recently trading around $275.51. It's up nearly 4% for the week so far. So I think the market is saying that no matter what the economy does, if the economy slows down, I think business is still going to be pretty strong at a restaurant not only like Chipotle, but also a Panera Bread. So restaurant stocks continue to trade pretty well. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, welcome back, folks, to Breakout Investing with Ken Shreve. Also wanted to take a look at IPG Photonics, another example of a stock with qualities I like to see, accelerating excuse me, accelerating sequential sales growth in recent quarters. IPG Photonics has a market cap of around $3.5 billion. It makes fiber optic lasers and amplifiers that are used in materials processing, telecom, medical, measurement markets. Very strong fundamentals here, very strong growth prospects. Again, fundamentally looks very solid. Trailing PE ratio of 46, so it's a pricey stock multiple-wise, but boy, a lot of mutual fund managers have been buying this stock in droves. This is a stock I do not own in my model portfolio, but another leader in the market that continues to show signs of strength. Now, obviously, the best time to buy IPG would have been last year back in August, and you can see the benefit of buying an upside breakout. You can see IPG broke out powerfully. It had moved sideways for several weeks, basing nicely, sellers getting flushed out of the stock, and then very heavy volume comes in. It breaks out over $20 a share, and then it runs higher over the next several months to its current price of around $24.75. So a move from 20 up to 75. Again, you have to ask the question. It's a much more difficult stock to buy up here at its current price level. It did break out recently, about 4 or 5 weeks ago, over $60 a share. Again, it's trading around $74 right now, hitting new highs. This is a stock that I'm still cautious on here. There was a lot of distribution in the stock 4 weeks ago after hitting a high, and in this type of market environment, even though it's still acting strong, I would still be cautious with IPG Photonics. Very strong fundamentally and technically, but it has made a big price move already. Okay, a couple of earnings reports I wanted to take a look at today. We had Network Appliance. Take a look at NetApp here. Very strong earnings today. You can see that NetApp was up 7.5% with about 15 minutes left to go in today's session, trading around 55.64. Stock made a strong move today in heavy volume. This was clearly a case where expectations were low. And this is not a stock that was trading up near a 52-week high, up near an all-time high, headed into earnings. So expectations weren't that great for NetApp, but stock is benefiting today, up about 7.5% to 55.64. It is breaking out. I would call it a flawed base. The stock has been consolidating gains, it looks like since February. Earlier this year, started to work its way higher. It cleared some resistance today at 55.18. So a good solid breakout today on strong earnings. NetApp is a provider of enterprise storage and data management software and hardware. Earnings were up 18% year over year. The company reported sales of $1.43 billion. That was up 22% from a year ago. And the strong results, the company said, was due to strong demand for its storage products. So nice numbers from Network Appliance today. First quarter earnings season is pretty much over, but I would say the good news far outweighed the bad when it comes to earnings. We also saw very nice numbers today from luxury retailer Tiffany. Take a look at Tiffany. Stock is making a huge move today, up almost 8.5% to 75.90. The stock gapped up sharply. Gaps up in price are difficult to buy. I remember Bill O'Neill over at Investors Business Daily telling us that it is okay to buy gaps up in price, even though the stock may look extended, just because the buying demand is so strong for shares. When you buy a stock like Tiffany at I don't know, 75, 50 a share, it still may not be too late, because the numbers were really strong at Tiffany. The stock broke out over $70.26 today with conviction. Big volume behind the move. Earnings up 40% year over year, with sales up 20% to $761 million. Company also raised its outlook for the year and said sales growth in the early part of the current quarter continues to exceed expectations. So, retail is tough. There are parts of retail that are working nicely, and other parts that are under quite a bit of pressure. The one consistent thing about what we've heard from retailers in recent weeks is that the luxury end continues to do quite well, whether it's a department store like Saks, or a retailer like Tiffany. Another stock that's riding Tiffany's coattails today is luxury retailer Coach. And we'll take a look at Coach. Shares up nearly 5% to 63.50. Good solid breakout in this name as well, over $61 a share. Again, these are what upside breakouts look like. And in a market environment, again, I've said this a lot, but I'll continue to say it. I mean, technical breakouts really have the best chance of succeeding when new institutional money is coming into the market. I can't say that's happening right now. There's probably been more signs of institutional selling in the market than institutional buying. So that tends to make for a formidable headwind for breakouts to succeed. But some of these breakouts could work. I mean, Tiffany could start to move sideways, hold on to its gains after today's move. Coach could do the same as well. I would consider ideal price action for Coach from here, for maybe some follow-through tomorrow where it extends its gains, and then if it can just start to move sideways, hold on to its gains, take a little breather. I would consider that constructive price action for Coach as well as Tiffany. So good numbers from Tiffany earlier today, and Coach riding its coattails. I wanted to take a look at Lululemon. This is another high-flying retailer. Lululemon taking a bit of a hit today. Shares are down 6.5% to 91.29. The problem here with Lululemon, you can see, is that it did break below its 50-day moving average today. There was a negative note that came out from FBR talking about pressure on gross margin. I think that's possible. Lululemon is going to be reporting earnings on June 10th. There's a very real growth story going on at Lululemon, but it is a stock that is arguably priced to perfection. So the company will be coming out with earnings June 10th. Margin pressures are out there, and that's weighing on the stock today. It was downgraded to underperform from market perform by FBR. So we'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Okay, welcome back, folks, to Breakout Investing with Ken Shreve. Had a couple of calls on the line that I didn't see, so I have to apologize to Nick in Sarasota. Nick, check back with me maybe next week, but I think Randy is still on the line from Clearwater. Randy, are you there?
Yeah, absolutely.
Nice to talk to you, Randy.
On several of the other host shows when you had been on for a segment, you had mentioned on a day like yesterday you want to see a follow-through, and I believe you said like 4 days after or something of that nature. as a confirmation, and I wasn't exactly, maybe you explained it somewhere, but I was trying to catch up on it, and I was wondering if you would take some time and possibly show us what you were talking about.
Yeah, no problem. So right now, yesterday was the first day of a rally attempt for all three indexes, for that matter, the Dow, S&P 500, and Nasdaq. After it was hitting new lows up until yesterday. So yesterday was the first day of a rally attempt. Today is the second day of a rally attempt. So that means tomorrow is Friday, would be day 3, and Monday is going to be day 4. And I learned to recognize the follow-through day from all the years I spent at Investors Business Daily. So at this point, assuming the lows of yesterday do not get taken out, the earliest we could see a follow-through day in the market would be Monday. We could see one Monday, anytime next week or the following week. Typically, you like to see them between day 4 and day 7. There's market precedent that says that's the best time to see them. And the follow-through day is basically a big percentage gain in an index. Preferably 2% or more. It could be 1.5%, 2%, but we had a big follow-through day in the Nasdaq last year on September 1st, where it was up 3% in heavy volume, where volume rose from the prior session. So that would be a green light. The market's way of saying that the trend is probably ready to turn upward. So I'm going to be looking for a follow-through day starting next week or beyond.
Okay, the market is essentially closed on Monday, right?
Right. Monday being Memorial Day, so Tuesday would be the next day for the market, correct?
So you count the first day being the one with the rise, and then you go 2 more days, and so it's on the fourth day you're talking about.
Exactly. So yesterday being Wednesday, that was the first day of the rally attempt. We had a rally attempt earlier, but the lows were undercut. So anytime a recent low is undercut, whether it's a Nasdaq or S&P 500, the rally is dead, and then you're just looking for any up day. So we got our first up day yesterday. Today is day 2, really doesn't mean anything. Tomorrow's day 3, that's not going to mean anything. Day 4 would be next Tuesday, and then we're just going to look between day 4 and day 7. And if you get one on the 8th, 9th, 10th, 11th day, it's not the end of the world. And then you just want to look for fundamentally and technically healthy stocks out there to buy.
But day 2 and 3 really don't mean anything, you're saying?
Exactly. Don't pay attention, because what you could have is just some short covering, some artificial up movement in the indexes. Could be people just shorting. You want to wait for that action to kind of dissipate, and then wait for day 4 and beyond, and look for that big percentage gain.
Okay. Well, that's what I would do, and see if we get it or not, I guess.
Okay. Well, I appreciate the call, Randy.
Thank you.
Okay. Okay, that's going to take us. Into the end of the show, and let's do a quick check on the markets here. The Dow is now negative, down almost 3 points to 12,392. Again, some weakness into the close here. Nasdaq still holding on to a good portion of its gains, up around 21 points to 2782, and the S&P 500 hanging in there as well, up 4 points to 1324. But the Dow is negative, down 3 points now to 12,391. Folks, don't forget to check out a trial to Ultimate Growth Stocks right on the homepage of TFNN.com. And I appreciate you listening. We'll talk to you next week.
Great Basin Gold is an international gold mining